So if you're thinking about an S-Corp election or converting your business into one, don't treat it like a tax hack. Treat it like a strategic move, because when it's done well, it works. When it's rushed, it creates problems. Hello there, Salim Omar here from Straight Talk CPAs. Today I'm joined by Sabir. We're going to talk about S-Corps. Sabir, welcome.
Hi, Salim. Thank you for having me.
So there's a lot of talk about S-Corps these days. Online articles, videos, there's a lot. And it's presented as it's the best thing since sliced bread. And we are here to share with you that it isn't just about saving 15% on self-employment tax. There is more to it. So if you're thinking about an S-Corp election or converting your business into one, don't treat it like a tax hack. Treat it like a strategic move, because when it's done well, it works. When it's rushed, it creates problems.
Yeah, exactly. So the S-Corp conversion is much bigger than the savings on self-employment taxes. So there are a lot of misconceptions. So just let me clear the biggest one. So that is, S corporation is not a new entity. It is just a tax election you file with the IRS. So nothing changes at operational level, right? So it does not change your legal structure. It does not change your EIN number. It does not change your bank account number. You are just telling the IRS to tax your business differently than it was without the S-Corp election.
No new entity. It's changing. It's converting what you have now. So I like that distinction. It takes a little bit of confusion out from what people think that they're creating a new entity. They're not.
Yes, exactly. So, it's like the popularity of S-Corp comes down to only payroll taxes. So I'll just tell you what's the difference here. So with a regular LLC that is taxed as a sole proprietorship, all the net profit is subject to self-employment tax, right? But with an S corporation, income is split between salary and a distribution, and you only pay payroll tax on the salary and not on a distribution part. So which
And that's
creates
where the saving comes in, right? The self-employment, Social Security, Medicare, 15.3% comes in with that.
Yes, exactly. And but that's just the one part of the story, right? Because once you elect S corporation status, the expectation changes. So now you are running a formal payroll, you
Mm.
are filing a separate corporation tax return, and
Mm.
you are keeping tight records. Like, but the most important is now you are paying yourself a reasonable salary.
And that's where a lot of people get it wrong, don't they?
Yes, definitely. Because the IRS requires the business owner to take a reasonable salary. Now, reasonable salary is what a business owner would pay someone else to do the same job which he is doing for his own business, right? So let's say if you are generating $150,000 on an as a net profit, and if the owner is taking only $10,000 as a salary, now that raises a red flag, right? Because the IRS looks at your role, your experience, industry standards, and the hours the owner spent working in the business. So your salary should be consistent with all these standards, and it should reflect what industry norms reflects.
So it's not really, and this is a conversation you and I always have with our clients. It's not about picking the lowest number possible. It's about defensibility, isn't it?
Yeah, so it's like, no, it's not about minimizing the salary, because people can think like, okay, so then let's take a $5,000 salary against 200k profit, right? So
Right.
it's not about minimizing salary, it's about structuring these
Mm.
bifurcation in a way that gives you defensibility when it comes to IRS, and allocate your income properly.
Yeah. So, Sabir, I want to shift gears and talk a little bit about the structural limitations that most people miss out on. They just go right for this S corp. They look at the 15.3% self-employment tax. What are some other things that they should be considering?
There are a lot of things. But if you talk about structural limitations, so there are limitations when a person like a business owner, he's having a vision of a growth, and if he wants to raise the capital, right? So for example, when it comes to S corporation, the maximum number of a member cannot exceed more than 100, right? And they
mm,
can only issue one class of stock. So if there
mm,
are public companies out there or a
mm,
venture backed companies, right? So when it comes to venture capitals,
mm,
they design the ownership in a different way. Like for first these number of shares you will get these, then rest of the profit
mm,
we will distribute. Now that creates a second class of stock. So that's where
mm.
this structural limitation comes in, especially in case of ownership when it comes to S election.
Yeah, so it's not, if your long-term goal is raising venture capital or it's going public, then an S corp is not going to work. What happens if profits drop? So yeah, it makes sense. Kind of some examples you've given us. Profit is 100,000, 150,000 makes, or 200 and so forth. It makes sense. But what if a business is going through some volatile times and next year the profit is much lower or maybe even a loss? What happens then?
Yeah, so let's say you elect an S corporation, and in future your profit shrinks significantly, right? So you might decide that it no longer makes sense because nobody wants to file a separate return, all and undo all the compliance that brings up with the S election, right? So
Mm,
definitely you can terminate the S election, but once you do, you generally cannot re-elect it for next 5 years without the
mm.
special IRS approval. And it is not easy to get the IRS approval when it comes to these kind of situations.
So
So
you don't want to
it's like,
toggle on and off.
yeah,
You want
it's
to
not
kind of take a
something.
longer term view.
Yeah, it's not something you casually toggle on and off. Like in this year you
Mm.
have high profit, let's do S election. Next year we do not have enough profit, let's not do S election, and in third year we can do it again. No, that doesn't go like that. Once you move out of the S election, 5 years limit, a cooling period, you can say, that is a 5 years you will stuck without S election.
I like the cooling period terminology. Are there any other technical areas, a couple or so that that somebody, our viewer needs to
Yeah,
keep top of mind?
a lot of technical areas are there at all level of S corporation. So before doing S election, during S
Mm,
election, after doing S election. So I mean, couple of them I can think of are, so let's say if you already are a C corporation and you can think of doing S election, right? So you can do that, but
mm,
there can be a built-in gain tax issues. So there is a separate tax, and the name of that tax is built-in gain.
mm,
So that issues is also there. And if there is a too much shareholder debt or improper distributions, that it can create complexity, right? Because we discussed there cannot be a second class of stock, right? So improper distributions can create a second class of stock because one person is
mm,
taking higher distribution, another taking is lower. So why not the same distributions of stock? So the other one is, if you are thinking to move your asset out of the S corporation, now that's create a taxable event. It's like your S corporation is selling that asset, even if it is your own asset. So
mm,
those are the other technical areas, and there are a lot of them, but these are the main areas you want to
mm,
look into when you are an S corporation. So again,
mm,
it's not something we want to toggle on off because of these technicalities and a lot of
mm,
moving pieces
mm,
around the S
mm.
election.
So not as obvious as saving self-employment tax and becoming an S corp. Just kind of really think about this as a strategic move for your business, not as like, all right, watch the video, looked at online, and say, the popular conversation online is may become an escort, but kind of think longer term.
Yes, definitely. So there are a lot of parameters we discuss, right, for doing a selection. So just let me bring one of them here. So profit, right? So
Mm,
it makes sense when your net profit is at least higher than 50 to 70,000 dollars, because if your net profit is $70,000, you will be paying someone payroll tax, right? Right. So you will be only saving on 30,000 or 40,000. Now you have extra compliance cost, filing additional S corporation tax return, filing payroll taxes, right? Issuing W-2s. So there are extra compliance costs as well. So it makes sense only if your profit is at least more than 70 to $80,000. So that's, it's like a general parameter to decide whether to do the S election or not. And you look at all these things before doing S election, so that it gives you an idea whether to do it or not.
Lot of interesting things you shared. Give us a quick kind of a recap, Sabir, on what we have talked about.
The first thing comes to the mind when it comes to S corporation is saving on self-employment tax, right? So for that, we have determined a general parameter of at least having 70 to $80,000 of profit, right?
Mm,
So that is one parameter. Another parameter is what is your vision with these entity, with these
mm,
LLC. If you are thinking to raise capital, right? If you are thinking to go public, then it is not for you, right? Because then it's restrict your maximum number of shareholders, right? The other thing is if you are planning to move assets in and out of the S corporation entity, then also you have the limitation there, because then you'll have to pay taxes on there. So all in all, you have a lot of things to consider, not only self-employment taxes and not only profit. Again, the another criteria is reasonable salary. Then you need to go and research the market, what is the industry standards, and issue yourself a W-2 for that amount. So a whole lot of thing when it comes to S election.
Thanks, Sabir, for sharing your insights when it comes to S corps. You have so many conversations with clients every day, and I really appreciate what you shared. Hope folks found this useful. If you like this video, please hit the like button and feel free to share a comment. We look at every comment we receive and respond back. Thanks for watching this, and see you on our next video.